forcing the biggest financial transparency reckoning in modern presidential history. In a stunning development that broke just hours ago, the Cayman Islands Monetary Authority has released previously sealed banking records showing millions in undisclosed offshore accounts linked to Donald Trump's business empire. And here's the kicker. Warren Buffett, who stayed mostly quiet on Trump for years, just went on CNBC and said the documents reveal the kind of financial engineering that makes Enron look straightforward. It's honestly hard to believe we're watching this unfold in real time. This isn't just about tax avoidance or shady accounting. We're talking about potential violations of the Foreign Account Tax Compliance Act, undisclosed conflicts of interest during his presidency, and financial relationships that could have influenced everything from tax policy to foreign affairs. And trust me, the political and legal fallout from this is just beginning. Let me fill you in on what's been happening behind the scenes. So, here's the scoop on Donald Trump's financial empire and why these offshore revelations are so explosive. Trump has built his entire political brand on being the ultimate deal maker, the billionaire who's too rich to be bought, the businessman who knows how money works better than anyone. From the moment he came down that escalator in 2015, his wealth was his calling card. Whether it was his refusal to release tax returns, his claims about being worth $10 billion, or his insistence that his business acumen made him uniquely qualified to run the country, Trump's financial mystique has been central to his political identity. For years, he fought tooth and nail to keep his financial records private, claiming presidential immunity, executive privilege, and every legal maneuver his lawyers could dream up. But here's where the rubber meets the road. We're now looking at the release of documents that Trump's legal team has spent nearly 8 years trying to suppress. According to Politico's report from March 12th, the Cayman Islands Monetary Authority made the unprecedented decision to comply with a U.S. court order requiring full disclosure of accounts connected to Trump Organization shell companies. Bank records are being released. Asset valuations are getting scrutinized. Financial relationships with foreign entities are coming to light. This massive document dump is happening because a federal judge in the Southern District of New York ruled that Trump's claims of executive privilege no longer applied once he left office, and that ongoing investigations into potential financial crimes required full transparency. And guess who's stuck right in the middle of this firestorm? Yep, Donald Trump himself, along with his sons, Donald Jr. and Eric, who've been running the Trump Organization. They're supposed to be legitimate businessmen operating above board. But here's the kicker. These documents allegedly show a web of offshore accounts, shell companies in the Cayman Islands and British Virgin Islands, and financial transfers that were never disclosed on required federal forms. The Treasury Department wants answers about potential FATCA violations. The IRS is examining whether taxable income was hidden offshore, and Democrats in Congress are already drafting subpoenas for testimony. And before we go any further, let's be real for a second. Offshore banking isn't automatically illegal, and plenty of wealthy Americans use foreign accounts for legitimate international business. But when you're president of the United States or running for president, the rules change. You have disclosure requirements. You have conflict of interest concerns. You have a duty to the American people to be transparent about where your money is and who you're doing business with. Now, back to the matter at hand. Reports from around March 10th revealed just how alarmed financial regulators were becoming. The Cayman Islands Monetary Authority initially resisted the court order, citing banking privacy laws and concerns about setting precedent. But after the federal judge imposed escalating daily fines and threatened to hold Cayman officials in contempt, they capitulated. The released documents reportedly show at least 14 separate accounts across 3 Cayman banks with aggregate balances at various points totaling anywhere from $47 million to over $200 million, depending on the time period, examined. Talk about strong numbers. Essentially, investigators are looking at whether Trump used these accounts to shelter income from U.S. taxation, to hide the true extent of his wealth or debt, and to maintain undisclosed financial relationships with foreign entities during his time in office. And this wasn't kept quiet. The moment those documents hit the court's electronic filing system, reporters from the New York Times, Washington Post, and Wall Street Journal were downloading them. Within hours, the story was everywhere. This announcement sent shockwaves through both political parties because it raised all sorts of questions. If Donald Trump, who spent 4 years as president, claiming he'd separated himself from his businesses, who insisted he'd placed everything in a trust, who fought every attempt at financial transparency, was actually maintaining millions in undisclosed offshore accounts the whole time. What did that mean for everyone else who defended his financial arrangements? Now, this isn't the first time we've seen Trump's financial dealings come under scrutiny. Trump's relationship with financial transparency really only extends as far as what benefits him at any given moment. Whenever disclosure requirements become inconvenient or threaten to reveal something damaging, he's quick to lawyer up, claim privilege, and drag things out in court. We've spotted this pattern time and time again. Just think about how he handled the Manhattan District Attorney's investigation into his business practices. For years, Trump fought subpoenas for his tax returns and financial records, taking the case all the way to the Supreme Court twice. He claimed that sitting presidents couldn't be investigated, that state prosecutors had no jurisdiction, that the requests were politically motivated harassment. The Supreme Court ultimately ruled against him, but not before he delayed the process for years. Then there was his relationship with Deutsche Bank, the only major institution still willing to lend to him after multiple bankruptcies. Congressional committees spent months trying to get records of Trump's loans from Deutsche Bank. Wanting to understand who was guaranteeing those loans and whether foreign entities were involved, Trump sued to block the subpoenas, claiming they exceeded congressional authority. Eventually, the documents were turned over, revealing loans totaling over $300 million, some coming due during his presidency. And let's not forget how he handled the emoluments clause litigation. Multiple lawsuits allege that Trump was violating constitutional prohibitions against receiving payments from foreign governments through his hotels and properties. Foreign diplomats stayed at Trump properties. Foreign governments held events at his facilities, and foreign leaders praised his businesses while conducting official state business. Trump claimed the emoluments clause didn't apply to fair market rate business transactions. The cases dragged through courts for years, and most were ultimately dismissed on technical grounds after he left office without ever reaching the merits of whether he'd violated the Constitution. Even his charitable foundation became a legal nightmare when the New York Attorney General investigated and found that the Trump Foundation had engaged in self-dealing using charitable funds for business and political purposes. The foundation was forced to dissolve, and Trump paid a $2 million settlement. But throughout that investigation, Trump insisted it was a politically motivated witch hunt, that he'd done nothing wrong, and that charity watchdogs were just trying to damage him politically. Now it looks like his offshore banking arrangements are in the hot seat. This pattern is becoming all too familiar. You can maintain all the secrecy in the world and fight every disclosure request for years, but the moment the legal system finally forces transparency, everything you've been hiding comes tumbling out. So, what did Trump do to trigger this massive disclosure now? Well, it all boils down to a combination of leaving office, losing presidential immunity, and federal prosecutors finally getting court orders that stick. The impasse happened because Trump's legal team wanted absolute financial privacy and claimed that releasing any banking records would cause irreparable harm to his business interests and personal reputation. While federal investigators and congressional oversight committees were trying to determine whether crimes had been committed, whether national security had been compromised, and whether the American people had been deceived about conflicts of interest during his presidency, ultimately, judges just kept ruling that Trump had to comply since no one was willing to accept his claims of privilege anymore. As a former president under active investigation, Trump decided to take a maximalist resistance stance. He filed motion after motion to quash subpoenas, appealed every adverse ruling, and refused to voluntarily provide any documentation. His approach seemed to be just delay, hoping that political winds would shift, that sympathetic judges would intervene, or that prosecutors would give up and move on to other targets. At first, his base seemed to be on board with this idea. They appreciate defiance and the notion of standing up to what they see as government overreach and political persecution. But here's where things started to go wrong. But as the legal battles dragged into their 7th and 8th year, some cracks started appearing. Courts kept ruling against him. Fines started accumulating. The evidence of financial irregularities kept piling up. And importantly, Warren Buffett made a move that nobody saw coming. According to CNBC's report from March 13th, Buffett appeared on Squawk Box and was asked directly about the Cayman accounts revelations. Buffett, who almost never comments on individual political figures and who has a legendary reputation for financial integrity, said that the structure of the offshore accounts as described in the court documents, showed deliberate opacity designed to avoid transparency requirements. He went on to say that any legitimate business purpose for this level of offshore complexity is extremely hard to identify, and the simpler explanation is usually the correct one. Coming from the Oracle of Omaha, whose opinion on financial matters carries enormous weight with investors, business people, and the general public, that's a devastating assessment. While Trump's core supporters were steadfast in holding their ground, predictably, business leaders and moderate Republicans began to shift their view of Trump's financial credibility. Polls indicated that Americans were increasingly concerned that Trump might have been compromised by undisclosed financial obligations during his presidency, with a YouGov survey showing 63% of respondents believing offshore accounts should have been disclosed before he took office. This was the moment Trump's legal team began to sweat a little. You see, Trump values winning above all else, maintaining his image as a successful billionaire, and overall avoiding anything that makes him look weak or dishonest. He doesn't want to be tied to financial scandals that undermine his credibility as a businessman and make him look like he's been hiding something all along. That's definitely not the victory narrative he seeks. And then his lawyers went ahead and made a move that, according to legal experts, was a serious misstep. The compromise attempt involved Trump's attorneys offering to provide a limited set of account summaries rather than full banking records, and figuring they should negotiate with prosecutors about redacting certain commercially sensitive information. They even considered releasing some records voluntarily while fighting others in court, hoping to appear cooperative while still maintaining some control over the narrative. But then when Trump himself caught wind of all this, he absolutely lost it. According to sources who spoke to Rolling Stone on March 14th, Trump called the idea of any voluntary disclosure the dumbest legal strategy he'd ever heard, and demanded his lawyers fight every single document request to the bitter end. In Trump's eyes, compromising is just a sign of weakness. Voluntary disclosure, that's pure betrayal. Any lawyer who dares to suggest cooperation with prosecutors is instantly labeled as not tough enough, not loyal enough, not willing to fight. Now, this left Trump's legal team in a tight spot. On one side, they really need to maintain Trump's confidence and keep getting paid, because he's notorious for firing lawyers who don't follow his instructions and for disputing legal bills when he's unhappy with outcomes. The MAGA base will drop any attorney like a hot potato if Trump signals they're insufficiently loyal or aggressive. On the flip side, they actually have to practice law ethically and effectively. That means figuring out how to comply with valid court orders, how to avoid sanctions for frivolous motions, and how to protect their own professional licenses and reputations. The tricky part is all of that requires some level of acknowledging legal reality and cooperating when judges issue clear rulings, which Trump fundamentally opposes. So his lawyers are caught in a bind. They can either keep fighting every disclosure order, which means racking up massive legal fees, accumulating contempt findings and fines, and eventually losing anyway when appeals run out. And that only makes the final disclosure more damaging, because it looks like Trump had even more to hide. Or they can advise Trump to comply strategically with the most defensible requests, provide the required documents, and try to control the narrative around what the records actually show. But that'll definitely make Trump turn against them, fire them, and publicly blame them for any damage the disclosure causes. It's a tough situation, and that's the mess Trump creates for the lawyers and advisors around him. He demands absolute loyalty and wants them to fight every battle without ever surrendering. But then he points fingers when strategies fail and courts rule against him. He's not shy about tossing them under the bus whenever the legal outcomes don't go his way. This whole scenario is causing major stress within Trump's inner circle and the broader Republican establishment if federal courts and international banking authorities have forced complete financial disclosure. And if Warren Buffett is publicly questioning the legitimacy of Trump's offshore structure, every Republican who's defended Trump's refusal to release financial records is left wondering if they've been defending something indefensible. Those moderate Republicans who are trying to balance supporting the party's standard bearer while maintaining credibility with business community voters are now worried sick about being associated with what increasingly looks like financial impropriety. Meanwhile, the MAGA-deards believe the entire thing is a deep state hit job orchestrated by Biden's Justice Department and that Trump is being persecuted for being too successful and too threatening to the establishment. Things became even more intense when Mitt Romney, one of Trump's sharpest Republican critics, who has always positioned himself as defending institutional norms and business integrity, gave an interview to CNN on March 14th. Romney had been pushing for full financial transparency from presidential candidates for years and had released decades of his own tax returns when he ran in 2012. He stated that the American people deserved to know during the 2016 campaign whether their presidential candidate had financial obligations to foreign entities or was using offshore structures to avoid taxation. And he criticized Republicans who had enabled the controversy surrounding Donald Trump's financial secrecy has intensified dramatically, especially as critics argue that Republican leaders helped enable it by blocking congressional investigations and defending his refusal to disclose key financial information. When a figure like Mitt Romney, someone closely associated with traditional Republican business values, publicly says the party failed in its oversight responsibilities, it signals that the political damage is spreading far beyond Trump himself. Romney's criticism suggests that concerns about financial transparency are no longer confined to Trump's political opponents, but are beginning to resonate within parts of his own party. The legal system eventually caught up with Trump's long-running resistance strategy. On March 11, a federal judge in the Southern District of New York issued a sweeping ruling rejecting Trump's final appeal to block the release of financial documents connected to accounts in the Cayman Islands. The case had moved through years of legal battles, including numerous motions, appeals, and jurisdictional disputes. Ultimately, the court concluded that the public interest in resolving questions about possible financial misconduct and conflicts of interest outweighed Trump's arguments for continued secrecy. After years of delays, the legal process reached a decisive turning point. According to the ruling, the judge determined that Trump's arguments for keeping the record sealed lacked sufficient legal merit and that the prolonged litigation had effectively served as a tactic to delay disclosure. The court emphasized that no individual, regardless of wealth, status, or previous office, can claim permanent secrecy over financial arrangements that may violate disclosure requirements or involve potential conflicts of interest. The decision was widely interpreted as a strong judicial rebuke, signaling that the courts were losing patience with prolonged efforts to stall transparency through legal maneuvering. Legal analysts quickly drew comparisons to past moments when the judiciary forced major disclosures from powerful political figures. Some commentators noted that the tone of the ruling echoed earlier cases involving presidential accountability, particularly disputes over access to government records during the presidency of Richard Nixon. The suggestion that a former president's financial secrecy could reach a similar level of judicial scrutiny immediately intensified media attention. Even conservative legal voices acknowledged the seriousness of the situation. Former federal prosecutor Andrew McCarthy remarked during a television interview that if undisclosed offshore accounts existed during Trump's presidency and were not properly reported on official disclosure forms, the legal implications could be significant. He added that any undisclosed financial relationships with foreign entities could also raise national security concerns, making the matter difficult to defend legally if the allegations prove accurate. The political implications are substantial. Trump is already facing multiple legal challenges, and the emergence of additional financial questions could further complicate his political standing. Meanwhile, respected investor Warren Buffett weighed in publicly, saying that the reported financial structure appeared unusually complex and difficult to justify from a purely business perspective. Buffett rarely comments on specific political figures, so his remarks drew significant attention across the financial and political worlds. Democratic leaders are expected to use the controversy to reinforce arguments that Trump resisted financial transparency throughout his political career. They are likely to frame the situation as evidence that disclosure rules for public officials must be strengthened and more rigorously enforced. Campaign strategists anticipate that statements from financial experts and court rulings will be used in political messaging aimed at emphasizing accountability and ethical governance. At the same time, federal regulators face a delicate situation. Agencies responsible for enforcing financial transparency laws, particularly the U.S., Treasury Department and the Internal Revenue Service have long emphasized the importance of preventing the use of offshore accounts to hide taxable income. By pursuing aggressive disclosure measures involving a former president, regulators risk accusations of political bias from Trump supporters. However, failing to act in the face of potential violations could undermine the credibility of the entire financial compliance system. The case also raises deeper questions about how financial disclosure requirements for presidents and senior government officials should function. Those rules were largely strengthened after the Watergate era in order to ensure that the public could identify potential conflicts of interest involving elected leaders. Officials are expected to disclose assets, liabilities, business interests, and sources of income so voters can evaluate whether policy decisions might be influenced by personal financial relationships. If the system allows major financial assets to remain undisclosed for years through prolonged litigation, critics argue it could weaken the effectiveness of those safeguards. The concern is that future presidents might follow a similar strategy, delaying disclosure through court challenges until political attention fades or legal timelines expire. In that scenario, the entire framework designed to promote financial transparency in government could become far less effective. Looking ahead to the upcoming election cycle, the political ramifications could be significant. Narratives formed months before an election often shape voter perceptions in powerful ways. If the dominant storyline becomes one of prolonged resistance to financial transparency followed by forced disclosure, it could create challenges not only for Trump but also for Republican candidates who are asked to defend his actions. Supporters of stronger transparency rules argue that voters consistently